by looking at a 2017 question. 2017 question. There is a 2017 question that I would want us to do together. Are you able to see that question on segment reports? Segment reports. Great. Segment reports. Wema Group. It is November 2017. Question number 5. Question number 5. Question number 5. November 2017. Question number 5. Roman 1. Question 5. Roman 1. Is there anybody who has been able to get that question? Is there anybody who has been able to get that question? Is there anybody who has been able to get that question? Is there anybody who has been able to get that question? Yes or no? Yes or no? Yes or no? Yes or no? Yes. Amengit says she tried it too. Great. 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 So I believe that everybody has been able to access that question. Thank you very much. Ladies and gentlemen, let's read it together. We are told there, with reference to International Financial Reporting Standards, IFRS 8, operating segments, outline 4 disclosure requirements for a reportable segment. For a reportable segment. It's page number 86. Page number 86. What are those, ladies and gentlemen, key disclosure requirements that we have got to give about these segments? 4 of them. I gave you yesterday like 6. The key disclosures under IFRS 8 regarding reportable segments. Who is able to remember, ladies and gentlemen? Who is able to remember, ladies and gentlemen, those things that we need to really do what here talk about for these reportable segments? Nowadays, the beautiful thing, ladies and gentlemen, with Google, right, is that you can even go there and Google. You say disclosure requirements, IFRS 8. It comes and then automatically you'll be able to do what here? To give us good answers. Good answers. 4 key disclosures under IFRS 8 for reportable segments. I'm not talking until somebody gets me started. These segments, the components within an organization. Components within an organization. Ladies and gentlemen, what does IFRS 8 need us to disclose about these reportable segments? I'm still waiting. Sorry. If you feel that I'm dragging, use pole. You need to understand that we are teaching and revising at the same time. And while revising, what I know is that I have to involve you quite a lot. You see, like the first one that I will pick, which is very correct here, is the information regarding the criteria of selecting the segments. The one that has been given by Moto is quite a serious one. That is quite a serious one. That's a disclosure requirement. The criteria that you used to segment your organization. to segment your organization. And then another one that I've seen, which is very, very important, ladies and gentlemen, remember the rule of 10%, that a segment becomes reportable if, for example, its sales, the segment sales is more than 10% of the group's sales. It becomes reportable if, ladies and gentlemen, for example, the assets it has is more than 10% of the group's assets. The same case applies to the profits. Once you get any segment, for example, that is reporting a profit, which is at least 10% of the group's profit, that segment has to be reported. That segment has to be reported. That segment has to be reported. However, ladies and gentlemen, we say that there could be other segments which are small segments, which at the end of the day, because of their uniqueness, perhaps you have only begun with them, operating them out here, and because we would expect like the chief officers, the directors, to monitor the performance of those segments, we say that at the end of the day, it will be very important for you to aggregate them. And if you are going to aggregate 2 or more segments to ensure that that concept of at least 10% is met, then you must give us the aggregation criteria. You must give us the aggregation criteria. I like that. That is a disclosure requirement. That's a disclosure requirement. Now, ladies and gentlemen, there are key things that you must always remember. Remember the concept of key customers of the segments. If you have got a customer, ladies and gentlemen, again, there we normally use the concept of what here? 10%. 10%, a single customer who is procuring goods, ladies and gentlemen, from a particular segment, and the goods this particular customer is purchasing happens to be more than 10% of the sales. Key customers, ladies and gentlemen, must always be mentioned in the footnotes of segment what here reports. Why is that very important to us? Because of risk assessment. Ladies and gentlemen, it's very important that we diversify in terms of our sales. It's always important for us to have what here as many customers as possible. If we are over relying on one customer, you can imagine like now here, if we were to only rely on say one student who was giving us say like 100,000, only one. What if the student says no now ever to pack and go? What do we do? So the concept of key customers, that's very important. You don't have to mention so much, but key customers is very, very important. The other thing, ladies and gentlemen, that I've seen you guys mentioning now very well in terms of disclosure requirements will be the sales revenue. The sales revenue for the segments and the inter-segment sales revenue, that has to be disclosed. Sales revenue for segments or segmental sales revenues, and of course, you can talk of segment and intersegmental. Segment and intersegmental sales revenue. That needs a disclosure, separate disclosure. The same case here with the total assets, right? Total assets of segments. Both allocated and what here? Unallocated. The same case with the total liabilities. The same case with operating what here? Profits. Operating profits. Right? Ladies and gentlemen, also remember that these segment reports are management reports. And we would want in some way, some kind of a reconciliation. Like now, for example, the profit that you have from the various segments, are they able to reconcile to the total, for example, profit for the whole group? So we have that concept of reconciliation, but that is why we must always have a column for what here for the whole group. And that column for the whole group is very important because you must always pick the figures that we have there and compare them with the group's what here, with the group's income statement, with the group's total assets in the balance sheet, in the statement of financial position, etc., etc. So I believe, ladies and gentlemen, that is quite what here enough for all of us at least will not be able to write nothing in an exam. Ladies and gentlemen, that one, of course, I know everybody would have gotten. Now, there is a semester, not this semester, but this other semester. The other semester, I went purposely to mark AFR at CASNEP. I wanted to know why so many students in this case here get a fail in AFR. You know, I've marked AFM, I've marked AMA for so many years. So at times I jump ship and go in this case here into some papers just to get that feeling. How comes so many students, ladies and gentlemen, nowadays fail in this particular paper? And then I discovered one thing, or rather than before I tell you what I discovered, yourselves, especially for the students who have ever attempted this AFR paper, what is your take on theory questions? Have you been able to see that nowadays the AFR examiner really gives us so many theory questions? Is there somebody who has made that observation? That the AFR examiner gives us so many theory questions. Is there anybody who has ever done this paper before? Kibet says yes. Yes. That's from only one student. Yeah. You'll be surprised. Nowadays, AFR questions, ladies and gentlemen, we expect over 30% of AFR questions to be theoretical, over 30% yes. And so many students have never known how to answer those questions. Why? Because most students here believe that this is a paper of what here, number crunching. So they forget, they go every time, they just want to know about group consolidation. They want to know about, they forget that there are very many free marks, low-hanging fruits from these theoretical areas. You get somebody asking you a very simple question, like the basic steps that must be followed when you want to come up with an IFRS. You get somebody asking you, for example, some simple concept, like under IPSAS, International Public Accounting Standards. Like somebody will ask you, like it was asked the other day in IPSAS 18. IPSAS 18, IPSAS stands for International Public Accounting Sector Standards here, right? So ladies and gentlemen, remember IPSAS basically is the criteria. These are accounting standards that those organizations which are not for profit follow to come up with their financial reports. They follow what we call IPSAS, International Public Sector Accounting Standards, right? Of course, in this case here, these are the counterparts. The other organizations that now are out there for profit, they normally use what we call IFRS, of course, and the ISS, which are being phased out gradually. So now you will go to an exam. Mwalimu here has taught you very well IFRS 8. But now you go to an exam and you get an examiner who tells you that in relation to IPSAS 18, operational segments, differentiate between service segments and the geographical segments. You see, IPSAS 18 talks about what here, operating segments, but now in the public sector. So they're asking you to differentiate between service segments and the geographical segments. And then they're giving you how many marks? 4. Before I continue, I would want to see whether there is anybody who can, through guesswork or through your own research, what is the difference between the two? Service segments and the geographical segments. Are they the same? Service segments, geographical segments. Through your own research and, of course, guesswork. Is there anybody who is able to give us the difference between this? If you got this kind of a question on an exam, I want to believe you bright students of mine would not have really gotten out of this exam room having written nothing. Very good. According to Kibet, Kibet is trying to get something out of this. Kibet has understood that under geographical segmentation, ladies and gentlemen, here we'll have our components being distributed out there in different locations, like what you guys would call branches. So our components, we are, ladies and gentlemen, structuring our organization in accordance to the various locations. Here we have our branches, geographical locations, yes. So the components, right? Then I can see TechnoSpark. Service segment is based on services offered, While a geographical segment is based on different what year locations. So Michael Owino tells us service segments are classified according to government services, and geographical segments are classified according to regional locations. I like the way you guys are using your words there, but at least you are able to understand. Ladies and gentlemen, the most important thing that you're supposed to understand is the fact that under service segmentation, we are picking our components, which we are calling segments, on the basis of what here? The various types of services that we are offering. The various types of services that we are offering. So for example, if it is Kenyatta National Hospital, they could decide to segment, ladies and gentlemen, their services in accordance, for example, to the various, like what do I call it? Like, for example, they could be having two departments here. They have, in this case here, in terms of segments, they could be having a segment which is looking at the training. Yes, they have a very good nursing school training segment. So that's a different type of what here service. And then, of course, we have got this other segment which is out there to treat, right? So the most important thing you're supposed to know, ladies and gentlemen, is that under service segmentation, we are basically picking our segments. We are basically picking our components on the basis of the various services offered by those components. Ladies and gentlemen, in most cases under service segmentation, we could even have a situation where all those components are housed in the same building, When we talk of geographical segmentation, it's not possible to have now all those segments based at one building. Not possible. Great. Thank you very much. We'll come back to that. So there are quite so many marks in these cases, and gentlemen, that you can pick out of this paper. Actually, if I was to be given an AFR paper today, I'll not fail. Why? Because most of the things, ladies and gentlemen, in AFR are common sense. They are general, very general. Like now you'll get somebody asking you to differentiate between Ipsos 9, and Ipsos 23. Ipsos 9 and Ipsos 23. Remember, this is just a general talk before I start engaging you guys in whatever that I'm supposed to be doing today. Now, can somebody in this case here tell me, what does Ipsos 9 talk about? What does Ipsos 23 talk about? You can Google. It's part of learning. Ipsos 9, Ipsos 23. What are you talking about, somebody? Ipsos 9, Ipsos 23. Somebody just Google there, Ipsos 9, and then you see a title, then you copy very fast, you paste it here. And our class today is going to be a very short class. Actually, in less than 20 minutes, you guys will be home and away. So Ipsos 9 talks about, I know it's accounting standards, but I want specifically Ipsos 9, International Public Sector Accounting Standard 9. What does it talk about? Revenue from exchange transactions. revenue from exchange transactions. Revenue from exchange transactions, that is IPSAS 9. How about IPSAS 23? How about IPSAS 23? Now we are talking of revenue from what here, somebody? Revenue from non-exchange, transactions. Now I would want somebody, in light of a big company, a big organization, which is not out there for profits like the UN. I would want someone to explain to me these two standards in light of the United Nations. In light of the United Nations. Please remember now that all of us have really understood the concept of muting ourselves. I would want somebody even to unmute themselves and talk to us without fearing anything. Somebody unmute and talk to us. 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 This is advanced financial reporting. Advanced financial reporting. This is advanced financial reporting. Somebody that notes there when they talk of United Nations, because if you go to United Nations financial statements, and I would even want us to Google them here, because they are a public information, you will see how they are recognizing their revenues in their income statement, right? Statement of surplus stroke deficit. You will see they're saying revenue from exchange transactions. And then we have revenue from non-exchange transactions. That's what the International Public Sector Accounting Standards requires these people to do, what you to report on. Why? Because at the end of the day, ladies and gentlemen, even if it's a church, even if it's a body like this one, at the end of the day, these accounting standards are pushing all these organizations to reach a level where they should start paying taxes. Right? So if there is any revenue, like now look at Catholic. Most of the Catholic schools out there, I mean, some of them are doing good business, right? So if they're doing good business and they're profitable, honestly, why can't they pay their tax? So the government would want, of course, government here, they come together to be able to help craft these international accounting standards. They would want, if it's Catholic Church, to tell us at the end of the day, out of their revenues here that they have, how much revenue is coming out of business. Right? So we talk of revenue from exchange transactions, ladies and gentlemen, and the exchange transactions, if it is, for example, ladies and gentlemen, like this UN, there are those goods that they'll be giving out, right? And as they give out those goods, ladies and gentlemen, they get what here? They get revenue. So meaning that the revenue that they have generated here is not out of donations per se. The revenue that they got here, they gave something in return. Look at, for example, our great UN here. They do a lot of publications, for instance, for climate, weather issues, right? Human rights. All those publications, they end up selling them. So whatever money that they get out of them having given out something, then that revenue has to be tracked and booked in under what we call revenue from exchange transactions as prescribed under IPSAS what here? IPSAS 9. Ladies and gentlemen, the bulk of their cash is normally out of what here? Donations from member countries, right? Right? So you'll realize that if, for example, they are getting donations, you go, for example, to your church. In church, you normally give donations. So when you give donations, ladies and gentlemen, to your church, does your church, in this case here, give you anything in return? Don't tell me a miracle. Don't tell me a blessing. Is there anything they give you in return whenever you give an offering to the church? No. So then the church, a good church should be able to tell us by the end of the year that, hey, look at this, look at this, look at this revenue. There is this revenue, ladies and gentlemen, that comes. There is this revenue that came to us because, for example, if we are a big church, we were able to let out our grounds for weddings. So at least in this case here, we gave something out there in return of the money that we got. Some big churches nowadays, ladies and gentlemen, they are in the car hire businesses, right? Right? They have got schools, right? So these schools, in this case here, they never, of course, the parents who paid their fees to those schools, they got some service out of that. Their money was not given to the Catholic schools, in this case here, for free. But ladies and gentlemen, we are trying to explain something very important here, that for most of these public sector organizations, ladies and gentlemen, like the UN here, a bulk of their cash normally comes to them for free. And if it goes to them for free, then they are required here to account for that money under what we call what your revenue from what your somebody non-exchange. Revenue from non-exchange transactions. I don't know whether that is a little bit clear. Is it a little bit clear? Is it something that you guys now, if you happen to get this in an exam, I want to believe from whatever little explanation I've done, I want to believe that you have gotten something. Yeah. You can see like May 2014. Like May 2014, they asked us, with reference to IPSAS 9, revenue from exchange transactions, summarize, no, not that one. That one is not a very good one, but I'll come back to it. I'll come back to that. If you look at November 2015, with reference to IPSAS 9, revenue from exchange transactions, differentiate between exchange transactions and non-exchange transactions. November 2015, question 5A. With reference to IPSAS 9, revenue from exchange transactions, unfortunately, I'll not be able to have a very good video because there are students who are deciding not to mute themselves. There are students who are deciding really not to mute themselves. So unfortunately, when the video that I'm recording here will not be able to help my students in the future. There's a student in this case here going by FK name. Please try to mute yourself. Every student in this case here, when we make an announcement of muting yourself, try to look at your mic. Is it your mic that is not muted? Great. The other question that, because I've just started by reading it, is this one here that was tested in December 2014, because I started by reading it. With reference to IPSAS 9, revenue from exchange transactions, summarize 5 conditions that must be satisfied before revenue from the sale of goods can be recognized. You guys are accountants. You don't even have to know anything to do with IPSAS. IPSAS 9 is telling us, ladies and gentlemen, IPSAS 9 is telling us here that we are receiving money in exchange for something, meaning that we are selling something. So before we recognize sales revenue, sale of goods revenue, there are those 5 conditionalities that must be there for you as an accountant to recognize money that for sure, this is a sale. Who is able to give us those 5 conditions? You don't even need to really have gone to anybody's class to give us 5 conditions, which in this case here must take place for us to be able to say, yes, here I'm going to recognize a sale. I don't know whether you remember those things like risk has been transferred from the seller to the buyer. We were doing those things in section 1, CPA. Is there anybody who is able to remember? Is there anybody who is able to remember those things? Ownership has been transferred. Is there anybody who is able to remember those things? They're normally 5. Kama chanda na pete, zinafuatana sana. Zinafuatana sana. Ama sijasome swali vizuri. Ladies and gentlemen, tunasema hivi, 5 conditions that must be satisfied before revenue from the sale of goods can be done what here somebody can be recognized. Pata potea. Zinakuwa 5. Hizi hufai kusahau. Nyinyi mnarecognizing aje? Mnarecognize aje? Should be measurable. I like what Anne is telling me. 2 things. That revenue must be measurable accurately, and also the cost must be measured accurately. Now, this particular car cost me $1 million, and I've been able to sell it for 1.2 million. So revenue has to be measured accurately, and the cost that we incurred for this particular product must also be measured accurately. And of course, we have the transfer of what here? Ownership. Transfer of ownership means that the risks and rewards associated with this particular product, ladies and gentlemen, has been passed to the buyer. I'm now left with the two conditions. Two conditions. Akile siku nitaanza kuwafunza hizi matheory, mimi nita devise some punishment strategy ili ambayo nita make sure kwamba kila mwanafunzi atakuwa nakumbuka kila theory ambayo namfunza. Mtanipea ruhusa kuintroduce punishment. Mtanipea ruhusa kuintroduce punishment. Sababu lazima uko nakumbuka. Granted, yes. Unasema granted. Hakuna agreement. You know the agreement, ladies and gentlemen, the one Anne is telling me, you are simply repeating our first point. The one of what your ownership has been transferred. No. My punishment normally for those that I've taught before is very easy. I'll simply ask you to bring your parent to school. You come with your parent. That is the best punishment ever. And your parent will be very happy. Atafurahi sana. Akija pale atakustaki, tumpatia zawadi. Atafurahi sana. Aya, sasa. Unfortunately, hata ukiwa parents, uko na baba mzazi. Kwanza ule mwamefika kama 70 years, ni mzuri sana. Ukimwambia baba ama mama leo nimeambiwa nikupeleka kwa shule, atashangaa sana. Atakuwa rafiki yangu sana. So this IPSAS thing is my next topic, ladies and gentlemen. Immediately after I finish this not reconstruction, but operating segments. Consideration, no. Nimesahau FR Segment 1, lakini nitawakumbusha. Ladies and gentlemen, the point you are not supposed to forget at all. Remember the concept of management, what here? Involvement. If you have sold this item and you're still involved in its operations, then that is not a sale. Involvement. You've sold an item like a vehicle, and you're still involved, for example, in terms of a day-to-day running. You sold this thing, and perhaps in this case, you are still getting cash flows. So all the benefits which accrue out of this particular asset must be received by the buyer. For us to say that for sure, the sale has done what here? The sale has occurred. A sale has done what here? Has occurred. Tulipoteza network. Ile ilikuwa page namba ngapi somebody? Ilikuwa page namba ngapi? Turudi hapo kwanza. Ilikuwa page namba ngapi? Naweza kukumbusha mwalimu. So katika AFR ukishashika theory kama hizo, ukuje ushike zile theory za CSR, corporate social responsibility, right? Wamekataa kuniambia page number kwa hii. Wamekataa kuniambia page number. Wala wako na kitabu. Ilikuwa page number gani ile? Page number 86. Page number 86. Page number 86. Page number 86 as we disappear, ladies and gentlemen, as we disappear, ladies and gentlemen. Page number 86. What are we told here? This examiner was a tough examiner. He started by scaring my students. He gave them a very big question. Akawaambia the following information was obtained from the financial records of Superfood Group for the year ended 31st October 2017. Once they mentioned Super Group, so straight away, a student knows that this is a group consolidation question. He starts really fearing it. So we are told their consolidated income statement of financial position as at 31st October 2017. I can see the consolidated income statement like that. Statement of financial position as well. Additional information. For management purposes, the business is organized into 5 operating segments. We have retail, catering, manufacturing, publishing, and others. Details of the operating segments are given below. They have given me the segmental revenues. They have given me the operating profit. They have given me very few things, segment and liabilities. Note 3, intersegment profit amounted to 42,23,000. So required, they want us to give them a segment report as far as the information provided above allows, according to International Financial Reporting Standards, IFRS 8, operating segments. So that's quite a very simple thing, ladies and gentlemen. A straightforward question. So the name of this is, the name of this group is Superfood Group. Superfood Group. Operating what year? Segment report. Right. So we have our operating segments. So we have our segments here. We have our segments here. We have our segments. We have our segments. We just come and mention them. They're given down there in note number 2. Note number 2, you'll be able to see we have retail. We have retail. We have catering. Catering. After catering, we have got manufacturing. Manufacturing. After manufacturing, we have got publishing. Publishing. After publishing, now we have the aggregated ones, which we call others. Others. And then now, of course, we have the whole group. Now we have the whole group there. The whole group. For reconciliation purposes, whole group must be captured. For reconciliation purposes, whole group must be captured. Whole group must be captured. Whole group must be captured. So tunaenda kazi namna hiyo. Sasa unakuja hapa, kazi yako ni kuangalia, kazi yako ni macho tu. It's which question is this? It is December. Is it December or November 2017? December or November 2017. So kazi yako ni macho tu. Sasa unaanza na segment revenues. Unaanza hapa na segment revenues. You know the rule. So segment revenue from note number 2. Note number 2, you can see retail segment revenue. The total revenue was 129, 842. Next, 66, 853. Next, we have 39, 495. Next, we have 32, 306. 32, 306. And then others, we have 37, 447. 37, 447. So initially, we used to introduce the column of elimination, so we no longer do that nowadays. So I would want you guys to come and add for me these figures for you to give me the whole group figure. For you to give me the whole group figure. The whole group figure. Is there anybody who is able to give me the whole group figure? The whole group figure. Mengicha anasema ati ni 60. Perhaps you 306, 943. 306, angalia tena vizuri. 306, 943. 306, 940, 305, eh? Students have got quite interesting answers. They're getting different type of answers. Let me get from more students. The total. Please don't work with my figures. Work with the figures that you have in your past papers. One of my figures, 305. 305 seems to be the popular. Ladies and gentlemen, remember, for revenue, the standard requires us to come under less intersegment. Less intersegment revenue. Very easy. Less intersegment revenue. Less intersegment revenue. So intersegment revenue, are you able to see that column under note number 2? The first one is dash. The second one, ladies and gentlemen, that I'm able to see there is 7465. 7465. The third one is 36791. 36791. The fourth one is dash. And then we have here 5663. 5663. Please, can somebody give me this total here for the whole group? For the whole group, which will be accounting for the inter segment. So Sharon gives me 49,919. 49,919. So remember the intersegment. The intersegment, ladies and gentlemen, they are normally supposed to be what here deducted. Don't forget that. Intersegment are fake sales. Just for example, like if I was selling some dresses, I have a shop of dresses, and then I get my madam, one of the fine days, showing up at my shop, and then she takes goods worth 50,000. Of course, at the end of the day, I will just count that as a sale. But you see, when we are doing end of year adjustments, I have to remember, hey, this 50,000 is like it came from this pocket of mine and transferred to the other pocket. I mean, this family. Remember, even in group consolidation, as I told you yesterday, what do you normally do with the intra sales? Internal sales, we always do what you deduct. Internal sales, we always deduct. So then could you kindly come here and give me sales to third parties? Sales to third parties. So sales to third parties, this is what the standard needs us to do. Always we have to get, at the end of the day, the sales to third parties by taking the total segmental revenue, subtracting intersegment revenues from this. So the first one is 129,842. How about this one? Somebody. Catering. Catering unaniambia 59,388. 59,388. That is catering. Today I'm not saying you guys really giving me figures, all of you. It has to be all of us playing ball. All of us must play ball. All of us must play ball. Mengich tells me the next one is 2704. The next one is 2704. This one I know very well is 32,306. How about others? How about others? Others. Thank you very much, Lynette. Others, you are taking 37,447 minus 56. So 31,784. How about the whole group revenue? How about the whole group revenue? The whole group revenue? The whole group revenue is 256,024. 256,024. 256,024. Thank you. 256,024. 256,024. And remember now, you as a CFO, you need to do what IFRS 8 dictates of us. It wants us mostly to also keep on doing what you're doing, reconciliations. So see whether your total segmental revenue going to third parties, total for the whole group out of your segments. Is it reconciling to your income statement? Just look at the income statement of the group. The income statement of the group, is there anybody who is able to see the consolidated income statement of the group where they've given us revenue of 256,024? Somebody. Is there anybody who is able to see the total revenue, service revenue, rental income? Is there anybody who is able to see 256,024? Yes. Great. And that is the end of this. That is the end of this table. That is the end of that table. That is the end of that table. That is the end of that table. It's not like a much of a continuation. It's the end. You can even decide to double underline that. Right? So after that, the second thing that these guys would want you to come and show to us is the operating profit. Operating profit. So you mentioned there operating profit. So operating profit, ladies and gentlemen, operating profit, what do we have here? Operating profit, if you look at the note given here, note number 3, note number 2B, they have given us the operating profit for each of the segments. So this is 68.87. We have 47.16, 47.16. We have 12.83. We have 11.69, and then we have others, 32.84. 32.84. Great. So could you kindly give me the total? Kindly give me the total. Give me the total. Kindly give me the total. Kindly give me the total. So somebody is giving me a figure of 17,339. 17,339. They're giving me a figure of 17,339. 17,339. So remember, these are the segmental. These are the segmental. Actually, the very best would have been, you see, after you have this title operating profit, you should have gone ahead to give us what we call the segment. Sorry for that. The segment profits for the various segments. So this is supposed to be like that. So that now you can come and less, you can come and less the intersegmental profit. Less the intersegmental profit. Less the intersegmental profit. Are you able to see the intersegmental profit? Intersegmental profit. Fortunately, this is a good examiner. Intersegmental profit, ladies and gentlemen. Intersegmental profit. They gave me a figure down there of 42.23. 42.20. Remember, that is what here? Total for all of them. Total for all of them. So basically, it's intersegmental, but they never allocated it to the various segments. So this 42.23, I'll come and allot it here in the entire group. So please come and give us this figure. Come and give us this figure, 17,339 minus 42.23. Minus 42.23. Is there anybody who is able to give us that figure? Really? Really? So they're giving us 13,126, 13,126, 13,116. I don't know who is telling me the truth. 13,116. So we have here 13,116 like that. So now here is the catchword, and this is what makes so many students don't get this concept rightly. When we talk of operating profit is supposed to be profit before what? Your interest and what? Tax, generally. Profit before interest and tax. Remember, segment reporting, we are never interested with what? Taxation. No. The only profit that you want to showcase for segmental reporting, ladies and gentlemen, is the total profit before tax. And that is why you are saying, for profitability, I'm not even interested in this. No. For profitability, I'm only interested in this. Right? So I would want to get, in this case here, profit before what? Here, tax. Meaning that I need to go and look at something called interest. Interest. Either interest income, interest expense. I need to look for those items under what we call a section of other items. But now listen, whenever you get these profits, ladies and gentlemen, you have to be very careful. Please go to the income statement that you have. Please go to the income statement that you have. Try looking for this figure of 13,116 and tell me what it represents. This 13,116, what does it represent? 13,100, I've seen it somewhere. I've seen this thing somewhere. I've seen this thing somewhere. It is profit before what year? It is profit before tax. And that is the end of this particular section. Once I get profit before tax, I can't bring in any other issue. Because already, if it is interest, already interest has been factored out and eliminated somewhere. Because this 13, if you have good eyes, you must have seen that 13,116 being the profit before what year? Before tax. So don't bring in the issue of what year? Other incomes. You'll get a zero in that section. The entire section will get a zero. Because already the examiner has simplified our work by giving us the profit before tax. And that is it. You come and double underline. That section is over. After that, ladies and gentlemen, now we go to basically the balance sheet now. Now we are looking at the assets of the segments versus the liabilities. So we start with the asset section. Start with the asset section. Start with the asset section. Are you able to see the segment assets? Is there anybody who is able to see the segment assets? Segment assets. Is there anybody who is able to see the segment assets? Segment assets. Segment assets. Is there anybody who is able to see the segment assets really? In C. In C. In C. Segment assets in note 2C, they have given us retail 50,152. So we have here 50,152. Then we have, ladies and gentlemen, we have 45,145. 45,145. Then we have 24,620. 24,620. Then we have 14,165. 14,165. Then we have 23,829. 23,829. So could you kindly give me this total? Give me the total assets from the perspective of the whole group. Please add this. Add them up. 157,911. 157,911. Now remember, ladies and gentlemen, that the segment assets you have read there, these are the ones that are allocated to the various segments. Allocated to the various segments. And then, of course, these guys will want to test your mind, would want to see whether you are sober. Like now here, they are coming from nowhere and telling you that they have an asset which belongs to who? A subsidiary. So an asset that belongs to a subsidiary does not belong to any of the segments. And there's no segment called subsidiary. So in that case, as I taught you yesterday, you're supposed to come and introduce what we call unallocated, not allocated to any segment, unallocated assets. So unallocated assets, unallocated assets, unallocated assets, unallocated assets, ladies and gentlemen, these, of course, are the assets that belong to who? A subsidiary. Assets dash subsidiary. Assets dash subsidiary. And this asset which belongs to the subsidiary, ladies and gentlemen, the asset that belongs to the subsidiary, wanasema ni pesa ngapi? Ni 764. Of course, now I'll account for it because it doesn't belong to any segment. I'll account for it under the whole group. Under the whole group. The whole group also comprises subsidiaries. So now we have here 764. And that is it. Come and give me the total. Give me the total. You take this plus this. Give me the total. You don't have to keep on adding. The others are quite conspicuous. Someone will be able to pick that. Yeah. So please give me the total assets. So somebody is telling me it's 158,675. 158,675. 158,675. Like that. So these are the total what here? Somebody assets. the total assets. Thank you very much. Now we go to the last thing. You can double underline this if you wish, or just a different color of a pen. Just pass a line like that with a ruler. And then now you go to the last one, which is what here? The liabilities. So go to the last one. Please don't ignore this one. Go to the last one, which is what here, somebody? Which is liabilities. So I hope this space of mine down here, somebody will be able to see. My handwriting is the worst in the world. There is a place I read which really motivated me, that very bright people have bad handwritings. Very bright people have bad handwritings. So we have here liabilities. So liabilities, we begin with the segment liabilities. So segment liabilities, are you able to see them? Segment liabilities, are you able to see them? Segment liabilities, yes, I can see them. 14,839, 14,839, 14,839. From there we have 97,83, 97,83, 97,83. From there we have 3609, 3609, 3609. From there we have 4704, 4704. From there we have lastly 34,175, 34,175. Meaning, ladies and gentlemen, that the whole group, what will be the whole group? Because you see, for liabilities, we don't have unallocated. For liabilities, we don't have unallocated. So 67,110, 67,110, 67,100, and what here, somebody? 10, 67,110. And that is the end of my segment what here report. That is the end of my segment report. So I'm so sure that there are some students here who are quite new to this platform. Kindly, we have got very strong online trainings here. And you need to get in touch with us and procure. Yeah, these are our numbers: 0719 525,000, right? And of course, we recommend to you what we call the blended learning model, where basically we give you three things. We give you the videos. Number two, we give you the live Zoom classes. And then, of course, we have the RCM's what year revision kit for each subject, going for how much here? Somebody 5,900 per paper. These are recommend to you. So, ladies and gentlemen, very good. So unidentifiable or unallocated liabilities, of course, you don't allocate them to any of the segments. What you would have done if, for example, you had an unallocated liability, you would have brought it here straight out and then added like that. And then added like that. Great. So let me first of all pause my recording.